If you're going to Medicare soon, there's probably a couple different terms that you've heard before that you're not familiar with. And that's what we're going to talk about in these next few moments that we have together. Hi, I'm Jackson Taylor, and this is your T65 Compass. And I'm going to go over these different terminologies that you need to know as a Medicare beneficiary. These are terms that you're going to need to understand in order to make an educated decision on what your Medicare option is going to be. Now, before I jump into this video, before I jump into this information, I do want to say nothing replaces talking to an agent about what your decisions are, what your options are. So please follow the information in the description of the video below to talk to one of our highly trained agents today about your Medicare options. Now, to the video, to the terminologies that you need to know. I want to talk about different terminologies that will help you understand how Medicare works, and then it'll help you understand your options and what you need to get into, and then it'll help you understand how the government's involved in Medicare. And then we are also going to talk about some terminologies that will help you understand your enrollment options as well. So when I'm talking about Medicare terminologies that you need to understand, the first ones that come to my mind are cost share terminologies. And cost share in itself is a terminology when we talk about health insurance. The term cost share is the term that describes your relationship with the company or the insurance company on who takes on what cost in this relationship here, right? You have the insurance company and you have you. When we're talking about Medicare, more specifically, we have Medicare and we have you, the beneficiary. So cost share is just a term that defines how the cost or the share of the cost is going to be divided. That's the easiest way to say it. So cost share is the share of cost, how it's divided. And it's broken up into a couple different terms here. These are the top five, if you will, that you're going to run into with any kind of health insurance, but even with Medicare, and I know that specifically you're watching this because of Medicare. The first cost share term that we see used the most often is going to be deductibles. And to define that very easily for you, that is just the amount that the insured has to pay before the insurance company will pay a dime. In other words, this is the amount that you have to pay before Medicare will pay anything, right? So if you have a $10,000 deductible on your car insurance, you have to pay $10,000 out of your own pocket before your insurance company will pay anything. Typically, you don't see $10,000 on car insurance. You do see it on health insurance a lot of times. But the good news is when it comes to Medicare, your deductibles are usually pretty low. You have a Part A deductible, it's a little over $1,700, and then you have a Part B deductible for medical that is $283 for this year. Now that goes up every year. We see those deductibles change. We've seen them go down before, but they typically do go up. But that means, let's talk about the medical deductible for a moment, that if you have a $283 medical deductible, you have to pay $283 out of your own pocket before Medicare will pay anything for a medical service. So when you see the term deductible, just think that is the initial amount of money that I have to pay before my insurance will pay anything. It's not the amount that I have to pay before insurance covers everything. That's not what that means. It's the amount that I have to pay before insurance will pay a dime or a cent towards any of my services. And then we go into our more common cost share after that. These are this is where a share of the cost is actually happening, right? Deductible is your share. You have to pay that up front before insurance will pay anything. But then we have a copay. A copay is a flat rate that is in your documents. It's in your insurance policy. It's a flat fee that you have to pay for a certain service. For example, if I have a $25 copay for doctor's visits, I have to pay $25 when I go to my doctor. If I have a $250 copay for a surgery, I have to pay $250 for that surgery. Now, the reason we call this cost share is because, to be quite frank with you, a surgery doesn't cost $250. Your copay requires that you pay $250, but at the end of the day, that surgery is going to be a couple $1,000s, which means that Medicare is going to pick up the remaining balance, or Medicare Advantage in that situation specifically. Now, when it comes to copays, original Medicare doesn't really have that many copays. There are copays for hospital stay once you've been in there for quite a bit of time. But typically, copays are going to be on Medicare Advantage plans. And the copays that we're going to see are going to be copays, like I mentioned, doctor copay, which is typically $0. We have specialty copay, which is somewhere around $35 to $50. We have surgery copays, which is around $250. There's a whole slew of them. But when you see the copay term, you know that means that it is a flat rate that you have to pay for that specific service. Then that takes us to coinsurance. This is, again, another balance here between you and the insurance company. This is the same thing as like copay as far as sharing the cost in that moment, but this is a percentage rather than a flat rate. So copay is a flat rate that I have to pay for a service. Coinsurance is a percentage that I have to pay for a specific service. So when I think of the term in coinsurance, I think specifically on Part B of Medicare, I have an 80-20 coinsurance, which means that Medicare pays 80% and then the beneficiary has to pay 20%. And you can see that that can be alarming because if I have a 20% coinsurance, there's no cap there. It's really easy to predict a copay because it says this is the fee that I'm going to pay. Coinsurance is a percentage. If I have $100, surgery done, then cool. My coinsurance is going to be $20. I got to pay $20. If my surgery is $100,000, well, if I have a 20% coinsurance, I'm going to pay $20,000. So it's very important that you understand these terminologies when you're reading into them and trying to understand them. And then this brings me into the final two I want to talk about when it comes to cost share. That's MOOP and TrOOP. MOOP is one that's very commonly used across all types of insurance, health insurance specifically, and then Medicare as well. Mostly Medicare Advantage because original Medicare doesn't have a MOOP. Medicare Advantage does. This stands for maximum out of pocket. That's what MOOP stands for, maximum out of pocket. So when you're looking at a plan, you're selecting a plan, and the agent or the document says MOOP, you need to understand that that is the maximum out of pocket, which means that's the maximum you as the beneficiary will spend out of your own pocket on services for that year. If I have a $10,000 maximum out of pocket, $10,000 is the cap that I would spend towards medical and hospital services. Once I reach that out of my pocket, the insurance company would pay 100% from there on for that year, that calendar year. So let's break this down a little bit. I have deductibles. If I have a $2,000 deductible, which typically you don't on a Medicare Advantage plan, if I have a $2,000 deductible, I pay $2,000 for my services, and then let's say I have a coinsurance, and that coinsurance takes me the rest of the way to $10,000 out of my pocket, right? I'm paying 20% of my services, and maybe I start taking some kind of treatment, like a cancer treatment, chemotherapy, and I end up spending $10,000 total out of my pocket between these cost shares. My MOOP then kicks in and the insurance company would take over and pay everything 100% at that point. So MOOP is a really good term. We like that term. It means that there's a stop loss. And then we have TrOOP, and this is one that commonly gets misused in the Medicare space. TrOOP is specific to Medicare. You don't see this term anywhere else. It's only for Medicare, and this is my true out-of-pocket. Medicare drug plans, both prescription drug plans and Medicare Advantage plans, anything that covers Medicare or drugs on a Medicare from a Medicare space is going to have a TrOOP. This acts a lot like a MOOP, but it's not. It's only for medications, and it's a true out-of-pocket. This is a combination of what I, the beneficiary, have spent and the insurance company has spent on my prescriptions. Once I reach that TrOOP, then the insurance company pays 100% on covered medications. Sounds a lot like a MOOP. It is a little different. It's only for prescriptions, and it is a combination of what I've spent or what you've spent and the Medicare plan has spent. And for this year, the TrOOP for all Medicare drug plans is $2,100, and that is going up next year in 2027.